Great. Well, we've got a pretty solid turnout for a Sunday. Thanks everyone for coming. We can go ahead and get started here. So typically these DAO meetings, for those of you who are new here, will spend most of the time going over what's gone on in Beanstalk the last week, and particularly new developments from Beanstalk Farms. I think for this one, we're going to spend some more time talking about a new proposal that Beanstalk Farms has with respect to the path forward. So would love to hand the floor to Publius to dive into that. And yeah, we'll get started.
Thanks, Chad. So lots of different. Oh, my mic went out. Can you guys hear me? My mic got all messed up. One sec.
I can hear.
Can you now?
I think it cut out now. Try again.
What about now?
There we go.
All right. So sorry about that. The punchline is that over the past couple of days, Beanstalk Farms has continued to iterate on the path forward proposal and the barn raise, and there are some potential, what we view as significant improvements to the barn raise structure going forward that we'd like to propose. So the main change is that instead of having the barn raise end, it should run continuously. And instead of it ending and there being a haircut based on however much is raised whenever the barn raise ends, the barn raise should just continue until the full 77 million is filled. And in practice, this has a couple of different side effects on the state of the system upon restart. But the main point is that the state of Beanstalk under this proposal would not scale down based on the amount of money that is raised prior to the restart, and Beanstalk would honor all of its previous deposits and debt pots. And there's a couple of different main thoughts behind this, but the main one would be a market environment that is incredibly weak, and people are generally questioning whether a non-collateralized stablecoin can exist at all. The thought of having Beanstalk take a haircut and then quickly grow back to the size that it was prior would seem to us to be a pretty artificial deleveraging. And instead, given people's skepticism about non-collateralized stablecoins in general, we think it's a better bet to have Beanstalk just turn back on effectively and to continue to run as it was before, perhaps with the same amount of liquidity if the barn raise sells out prior to launch, perhaps with significantly less liquidity than prior to the attack if the barn raise only fills some percent. But the concept is that the economics of Beanstalk wouldn't change substantively, in the sense that whether or not the barn raise continues or not, the minting schedule wouldn't change whatsoever. The only real change, I guess there are two changes economically. One would be that the amount of outstanding pods would stay the same, even if short-term the size of Beanstalk is scaling down. And that means that the outstanding pod rate, whether explicit or implicit, however you want to think about the pod rate, likely go up under this proposal, which, again, this goes back to having Beanstalk re-enter the market in adverse conditions and then continue to demonstrate the efficacy of its model. But there is some additional risk of increasing the potential pod rate of the system upon restart, and that increases the overall risk of the system. The second one is a lot more flexibility to participants in Beanstalk upon restart, whether they want to participate in the barn raise, assuming that there's still size left, allocation left, or whether to participate in the silo or in the field. And the main change under the barn raise proposal on the continuous side is that the thought would be to have the start at 500 for the pre-launch phase, but once Beanstalk relaunches, the weather immediately cuts down to I think the rate was 250%, and then decrease every other season for like 20 days down to 20%. So pretty quickly down. And the thought is that the benefit of effectively cutting the pod line for participating in the barn raise, that the whether that should be required or the interest rate required to participate in the barn raise will change substantively over time, depending on the state of the system, the minting of beans, the amount of barn raise tokens that have been minted, that have been paid off, et cetera, et cetera. So the concept is there's no reason for Beanstalk to pay such a high interest rate for continued participation in the barn raise, but instead have people continue to participate at a much lower rate and over time recapitalize Beanstalk. The peripheral change that responds to that, the vesting schedule, even though there's no haircut, would now be the minimum of two things. It used to just be how much of the barn raise debt issuance had been paid back, but now the vesting schedule proposal would be the minimum of how much has been paid back and how much of the barn raise has been filled. And so there's additional limits on the withdrawals until the system has been fully recapitalized. Now, there's lots of other nooks and crannies. Austin has actually done a fabulous job of writing up at length all of the details of this proposal to try to make it very clear, because of complexity. So there should be some of that being tried town if it hasn't been done imminently for review. But the general thought is to have continuous place until Beanstalk has been fully recapitalized, and it is a riskier position in the sense that there's no cut. Beanstalk is honoring all of its old obligations, even at potentially a scaled down size to start. But we think that from a longer term, a bigger picture perspective, it's probably better to have Beanstalk just operate even in pretty adverse exogenous and endogenous market circumstances. So if anything, this is the time to not cut any corners from a model perspective, and really, as has been the mindset from day one, let the model just operate out in the wild and demonstrate that strong enough incentive structures are all that you need.
Awesome. Thank you for that, Publius. Austin, maybe do you want to talk briefly about what the next sort of couple of days will look like with respect to this proposal?
Sure. Yeah. So particularly based on feedback from the last couple snapshots, and given the significance of this change, we figured it prudent to open a Discord channel dedicated to the discussion of this proposal, where we'll drop a write-up at the end of this call, and we'll let folks discuss the proposal in there for 48 hours or so, and then after which we'll propose the snapshot and have the snapshot voting period be for 48 hours as well. So that's the plan structurally over the next couple days.
Great. Anything else between Austin and Publius that you guys would like to add about this plan, or otherwise we can start moving into some questions from the chat.
I mean, there's a lot of details to this, and just want to emphasize that it's probably hard to touch all of the details in a short form like this. So again, would encourage everyone to take a look at the written proposal that Austin has written up. But obviously happy to answer questions now.
Yeah, of course. So what we'll do is we'll go ahead and move to questions now. If you have questions, please drop them in the town hall chat or raise your hand and I'll invite you up on stage. Going to go ahead and start heading down the list here. So let's start with a question. I guess it looks from a couple of users, but specifically about sort of the state of fundraising, Publius. If you want to talk about where things are at and with respect to fundraising OTC.
Spoke. There's been some since the last time. The general point would probably be that the overall market has definitely softened between the macro conditions and the Terra collapse, but that hasn't had too much of a significant effect on our expectations on fundraising going forward, in the sense that the vast majority of conversations that have been happening continue to happen, and there's progress on documents and stuff like that, and getting together a structure such that lots of people can participate. So making progress. Hard to speculate on exactly how much of this capital will turn into actual demand for the barn raise, but can be enthused by the.
Awesome. Okay, a question from Neural Virus. When will the interfaces for the NFTs or barn raise be available? So speaking to this, the launch date for the barn raise is currently slated for June 6th. So certainly we'll have everything ironed out before then. We expect to have a test version out a couple days ahead of that. So definitely shoot me a DM about that, and we can keep you posted on the timeline there. Next up from Harry Smith about the audit. How are we looking on the audit so far? Anything that we haven't seen or didn't see coming?
No, nothing on the audit front really to report. Halborn gave us a nice status update. They've started to audit certain facets, and nothing crazy.
From Jams, what was the genesis of this new proposal? Was it from an outside investor or internal?
It's a great question. I think it's internal, certainly, in the sense that it wasn't from an investor, but had been chatting with Manifold and Merchant and Publius all together and kind of putting our heads together. And it was just very obvious that the haircut, given the market situation, just seemed less and less reasonable. The point of a haircut is to have Beanstalk in a position where it can just start to grow again very quickly. But the concept of removing the haircut more conservative from a growth perspective, aggressive from a risk perspective, and given the current bear market vibes, if you will, feel like that's a good plan. People are saying my audio is bad. Hold on, let me try to fix my mic. One sec. Tell me if this is any better. I apologize, guys.
Sounds good right now, but we'll let you know if it cuts out.
All right, apologies. I think I messed up the jack on the microphone, so apologies.
Awesome. Okay, from Brewhouse, does the continuous pivoting affect the committed capital? I imagine it has to have a real impact on ongoing negotiations.
The short answer is that the capital that is committed is totally on board with this. And with the new proposal, they're enthused by it. And in terms of continuing conversations with capital, the main selling point to the capital has been the opportunity to buy beans at 16 cents on the dollar effectively, and that hasn't changed under the new proposal. So there's nothing substantive that has changed from this perspective, and therefore it hasn't really had any effect. The haircut is sort of a substantive change, but from a presentation perspective, it doesn't really change the economics other than what perhaps the short-term optimal strategy might be for a participant.
Question from Alex next. Can you go over again with a little more clarity how vesting will work? Assume the amount that someone can use from their old stash will just increase over time as the raised amount increases.
Yes, exactly right. So if you had 1,000 beans or 1,000 LP, the pods are not. There's no. The pods are just normal as they were, but the liquid assets, the beans, the stalk, the seeds, the LP tokens, those will all be this vesting schedule. The vesting schedule will be if you had 1,000 beans or 1,000 LP, you will be able to take or claim your beans at some percent, the vesting percent, let's call it. I don't know what the lingo is in Austin's proposal. It might be the ripening percent or something. But the concept is that percent, if it's 50%, you'll get 500 beans. It will be determined by the minimum of two numbers. It's the percentage of the barn raise that has been filled, so the 77 million effectively, and the percentage of the barn raise debt that has been paid back. And so if 50% tokens have been issued, but 80% of that has been back, the minimum would be 50%. Does that make sense? So you'd be able to claim 50%. Does that make sense?
Awesome. Alex, feel free to follow up with that. Yes, it does change over time as both of those parameters, the percent that's been filled and the percent that's been paid back, change, which would be, on a season to season or mint by mint basis. Moving on to IPO and chill. What new vulnerabilities would arise from relaunching Beanstalk with low, e.g. sub 30 million liquidity?
Well, it depends what you mean by a vulnerability. The main thing that would change would be from an economics perspective, that the pod rate relative to liquidity or relative to the supply would be different and substantively worse from a risk analysis perspective. So the concept is you would have a higher pod rate effectively, which may change the required rate of return or the required weather. Now, there was excess demand for lending to Beanstalk prior to the attack. It's unclear whether there will be demand for soil at 5,800% after the attack, but per usual, that's the main thing that's unclear, and there's no way to know what the demand for soil will be until Beanstalk launches. But that's the question.
Awesome. Let's see. Harry Smith asks, can we add a calculator for us noobs to calculate the haircut if there's a withdrawal? Harry, we can definitely look at adding a calculator. We've also got, for everybody else here, some graphics coming out to help show kind of how things move around when different actions occur. Awesome. I've reached the bottom of the questions, I believe, here. If anybody'd like to raise their hand and come up on stage to ask a question, please feel free. Otherwise, we'll keep going here. Question from the Guilfoyle. If silo and barn raised pod line are both getting 1/3 of mints, what are the benefits of participating in the barn raise versus putting money in the silo on restart?
So, that's a fabulous question. The barn raise will receive a fixed rate of return, which you'll know at the time, whereas the silo you don't know, and it has a different liquidity profile. So in the silo, you can always withdraw. Once you participate in the barn raise, you might be able to tokens, but there's not going to be a redeem from being different return profile. Now, furthermore, this is another detail that has been mentioned. Under this new proposal, Stalk and Seeds would also investing 9% that new participants in silo get a bonus apples to apples compared to someone that had stock prior to the attack. So there is a large benefit to participating in the silo as well, and that's perfectly okay from Beanstalk's perspective. It's preferred, in fact. So even it takes time for the barn raise to fill because the interest rate for the barn raise has gone down significantly, and participating in the silo is attractive again, and lending to Beanstalk is attractive again. That's fine. It just may take time for the barn raise to sell out because the 20% return may only be attractive once all of the previous NFTs, or the vast majority of them, have already been paid back, if that makes sense. So it just may take a little bit of time in that case for Beanstalk to attract enough demand for the barn raise to fill it, but that's perfectly okay from Beanstalk's perspective. It just may take time for the silo members to vest.
Great. Jams, I'll pass your question because I saw your update, but just feel free to ask it a different way if you need. We'll move on to Alex. Why would there be a haircut if there's a withdrawal? I thought the vesting explanation basically said there'd be no haircut. You can withdraw what was vested, and tomorrow more will vest.
So that was never the plan. The plan was always, if you claim whatever's vested, you forfeit the rights to the other stuff. Otherwise, there's no point of the vesting schedule. Then everyone would just vest and sell immediately, presumably.
Nasjack asks, I assume the UI would also tell us the haircut percentage at any given time? Definitely. We'll also have a UI to help explain how mints are getting distributed, and if you hold the barn raised tokens, which we're calling Fertilizer, you'll be able to see what tokens are receiving what. Next question from Justabean. How is this plan safer because of the bear market? If we raise just 50%, is it not safer, better to just restart the protocol 50% scaled back?
Well, it depends what you mean by safe. I would make the argument that economically, from a perspective, it's definitely safe to do the haircut. But if the goal is to compel the world that a non-collateralized stablecoin implementation is possible, then taking an aggressive approach on peg maintenance and honoring all of the previous obligations, even starting at a smaller scale, it's more aggressive from a risk perspective, but it's also more aggressive from a proof of concept perspective. And given everyone's skepticism on non-collateralized stablecoins, we think that's an opportunity that shouldn't be passed up.
Okay, scrolling back up a little bit for a question from Bernoulli Bean. So they ask, why is the calculation based on the minimum of the percent filled and the percent paid back rather than the product? And they say, if you had 50% raised and 50% of the debt paid off, wouldn't you only want to have 25% of the original BDV available to withdraw?
That is a great question, and I don't have an I don't have an answer for you at the moment.
Okay, cool. We'll circle back on that one. Thanks for asking. Disco Stew, to answer your question about this getting written up, absolutely. It's getting, we'll push a document that will come out right after this call. Same goes for the path forward document. I see that mentioned a little bit farther down. From Not Sure. What if we get to a point where entering silo, sowing in soil is seen as a better option than buying the barn raised NFTs? What's the incentive to buy the NFTs at 100% weather if the silo is paying 200% APR?
That's a great question. So the concept is, if all of the other barn raised tokens have been paid back, you can lock in your 100% weather, your 20% weather immediately and get 1/3 of bean mints until you're paid back, which would be instant, assuming that the system is minted. So it would be expected to be attractive at some point.
Okay, left curve scar. I saw that you called out Alex's question asking for us to readdress it. If you have a different way to frame the question you'd like us to tackle, please drop it in the chat and we'll do so. I've reached the bottom of chat again, so please feel free to raise your hand or keep sending us questions. Next question from Justabean. Isn't the goal to get back to our 50-50 minting schedule as fast as we can, since the 33-33-33 model has no credit history? Would this not extend the time frame for Beanstalk to get back to its original state?
I don't think it's fair to state the goal of getting back to the 50-50 minting schedule as fast as we can as the mindset. Although getting back to the 50-50 minting schedule will be evidence of a full recovery from this event. So there's something to be said for it. Now, there's an argument to be made that under this new proposal, the time frame for Beanstalk to get back to its original will be significantly longer. But it's not necessarily a problem, in our opinion. The main point is whether the model can work in any scenario. And given the general skepticism, people say I'm cutting out again. Hold on. I went no microphone, so you guys tell me if this is better. So now I'm just on my laptop. But there's general skepticism on whether people can create collectively a stable asset, and whether or not it's even possible to create a non-collateralized stable asset. And the main point is that if people are going to be compelled, then the way to compel them is to put Beanstalk in the hardest position to succeed possible. And that's been our mindset from day one. That was one of the main purposes behind the clean launch, where we didn't tell anyone about it until after it was live. There's no demand prior to launching it. So putting Beanstalk in a difficult position to succeed has always been the MO, and taking a haircut or cutting a corner doesn't necessarily seem like the right approach, frankly. So it's definitely more conservative, but it's also, given the goals here of creating new money, it might be better to be aggressive from that perspective. Definitely it's worth acknowledging that it's higher risk, for sure.
From IPO and Chill next, do you think there is potential for a secondary market where folks can buy the unvested portion of Stalk and Seeds? Might help isolate super bullish from those who want to dump and dip.
In theory, yes, but that isn't developed, and so not in practice.
Awesome. We're going to go to Alex next, who's raised their hand. Alex, you're up on stage. Come on up.
Hey guys, how's it going? Excuse me. Yeah, so I figured let me just ask this question again, and maybe we can have a conversation about it, since a couple of people have kind of pinged on my question about vesting. Maybe a little dialogue can clear it up for myself and maybe for others in the same time. So from what you explained, the way I understand the way vesting works is it's a function of time and a percentage of the minimum percent of those two things. How much we've raised versus how much we pay back the debt on the investment.
But not time-based. It's not time-based.
Okay, right. Sorry. But then let's say I had previously invested, let's say I had a 1,000 bean in some silo, right? And let's say today, 50% of that has vested, right? So today I could withdraw 500 bean, sell it, be happy, right? Now let's say tomorrow, one of those percents goes up from 50 to 75%. What I would expect to happen is 250 more beans show up in my account as claimable that I can withdraw and sell. Now, what I think you're saying is that that's not the case. Can you clarify this?
Yes, that is correct. So that would not be the case. Under the previous plan and under this new plan, under both plans, the concept is if you had 1,000 beans that are 50% vested, if you claim them, the act of claiming the beans means that you forfeit your rights to the rest of the beans, such that there is an incentive for waiting to claim and sell your beans. Otherwise, economically, every time anyone vests, it would kind of make sense for people to sell their beans. So the concept is you can't make it such that the efficient behavior is to every time anyone vests 1% for people to claim and sell. You need there to be an structure for people to wait to vest and wait to claim and wait to sell and leave the system. And so the concept is the people that are vesting and leaving early, they have to forfeit their rights to the future. They're going to sell at the beginning on relaunch. That's very damaging to the system. So you can take your money out and be the first guy out the door upon relaunch, but you have to take a significant haircut accordingly. So it's not fair that you can be the first guy out the door and then be the next guy out the door and next. There's no advantage to you for waiting then in that case. So there needs to be economically an incentive for people to not claim their vested assets and sell every time they vest. Apologies if that wasn't clear in the previous proposal. I thought it was pretty clear, but obviously not clear enough.
It was clear in the previous proposal. I just wasn't sure if that had changed with this new dynamic at play. But it sounds like it hasn't.
No, and in fact, the, the under this new plan, the thought would be if people vest their LP, this doesn't apply to beans, but if people claim their LP such that they forfeit some of their future LP, that decreases the total amount of non-beanstalk value that beanstalk needs to raise as part of the barn raise. So if people claim their partially vested LP tokens and their rights to some future LP tokens, actually also decrease the total amount of money that beanstalk needs to raise as well.
Got it. Okay. Thanks for explaining. Appreciate it.
Yeah, appreciate you for getting some clarity on it.
Awesome. Thanks for hopping up, Alex. I'll head back to the chat for now. So next question from Harry Smith. Do you think we're trying to over-optimize this raise?
I understand the question, but honestly, I think the real-time optimization has always been part of the ethos of Beanstalk, and we're presenting what we view to be the best path continuously, and we're all evaluating things in real time. So this is it's funny, right? Normally, before any BIP would go live, or even the discussion of a potential BIP, we would have discussed it for weeks and weeks on end and figured out, is this the right thing to present, or yada yada. Now we're totally naked, collectively we're all naked because we're all figuring this out in real time. And accordingly, there is something to be said for we're all out in the open and having this discussion and changing things in real time. And that may look bad to an outsider, but I think in reality, we just need to all collectively make the right decision. And when it's all said and done, making the right decision and picking the best proposal, that's the way to go. So there's nothing to be said other than we just need to pick the best course of action and move forward collectively.
Awesome. Another question from Wonton, which I think will be really interesting to discuss. That is in the document that we'll send everybody after this, but definitely want to get into it now. Wonton asks, after the protocol restarts, would you consider making the NFTs cheaper to attract more capital? Barriers major investors would have would be unchanged as they enter the initial round.
All right. So the implementation of this new structure actually no longer is supported by a 721 easily. So the thought is now to use ERC 1155, which is the semi-fungible standard. And in short, that the punchline is that people will be able to participate at the dollar level. So a minimum contribution would be like $1 USDC before the restart.
Sweet. Question from RG says Publius was cutting out earlier, but did he mention a percentage of capital with soft commitments? We were at 20% before the stale update.
I think we're still roughly in that range. There's been a lot more progress on getting documentation and stuff together such that we can get more than a soft commitment. So hoping over the next week or two to get more closer to hard commitments. Or more hard commitments, we should say. There are definitely some hard commitments in there.
From Bernoulli Bean, if people withdraw before fully vesting, will the $77 million for the raise be reduced?
I missed it. The short answer is if people burn LP tokens or beans, though. Only if they burn beans. Additionally, if the price is below $1 and vesting LP is converted to vesting beans, that would also decrease the amount of non-bean value that Beanstalk needs to raise. So there's multiple instances where the value decreases. It could also decrease slightly, but that for Beanstalk, good problems to have.
Okay. Next question from Jams. The new proposal isn't delaying the start of the restart, right? We're still on track for June 6th. It's just that there's no time limit for the raise. I can answer this one for you, Jams. That's correct. So June 6th is when the barn raise will begin. For the month of June, you'll be able to purchase fertilizer ahead of the Unpause. The Unpause is slated for early July after the audits are completed. Let's see. James also.
Can you guys hear me still? Even my mom is texting me; she can't hear the broadcast, so pretty bad.
It's a little bit rough.
Apologies. Let me try to move. You think it's a Wi-Fi issue?
I think it's Wi-Fi. So if you want to get a little closer to the router for a sec, that'd be helpful.
I'm in my usual spot, guys. Sorry.
Sorry, Austin. Didn't mean to dox the fertilizer here.
No, it's fine. I forgive you.
Excited to share this proposal with everyone. The whole of Beanstalk Farms has been working hard on this, but huge shout out to Austin for really crushing it the last few days. It's very well put together, and this is a complicated thing to explain and put to words. So hope you all can appreciate that once it's out. To answer one question while we're waiting for Publius to get back, Publius, let us know when you're settled again. There was a question earlier about building a dashboard of some kind for this. So a couple ways I think we can tackle that, Alex. First of all, from a UI standpoint, the plan right now is to incorporate all of the UI for purchasing fertilizer with the barn raise into the core app. So it'll be right there alongside everything else. We've also got a lot of really exciting updates to that UI with a lot of much requested updates from the last couple of months pre-exploit that we'll be incorporating at that time. So get excited about the new Beanstalk UI, I guess is all I can say. And then secondarily, we haven't discussed this explicitly yet, but I'm sure there will be a Dune dashboard and other analytics focused dashboards for this purpose. So stay tuned on that front. All right, Publius, how are we looking?
Good. I think there was one question on whether the raise will be audited. The hope is to have all of this new stuff done before the Trail of Bits audit. 100% of it will be audited by Trail of Bits. Don't know if these extra details will be able to be audited by Halborn prior to the relaunch, but they'll we're grinding to make sure that this is all done prior to Trail of Bits audit starting in a couple days.
Awesome. Harry Smith asks, can we launch on July 4th?
So we've all been playing around with that idea and working towards that, but honestly don't know if we can get there. So nothing would make us happier than to launch on July 4th, though. But don't know if that's realistic.
Next up from Bernoulli Bean. If the raise target is reduced from an early withdrawal, then percent of the raise filled will be updated so others' positions will be more vested. Is that correct?
Yes, but this is where the minimum of multiple things comes in, so it would increase if the minimum with a percentage of the barn raise filled, not the percent paid back. But in theory, sure.
That's also only specific to LP, is that right?
Correct.
Scooby has a question for Austin. Scooby asks, Austin, you seemed against this idea 5 days ago. Anything change in your mind?
I don't know what to say, man. There's a lot of good feedback from the community and lots of good ideas shared internally, and you'll get to see the artifact produced from that at the end of this call. Also, Scooby, I guess I'm not quite sure which part you're referring to. I don't know if you're referring to the minimum participation size or the haircuts, but let me know.
For Newly Bean, saw that you bumped your question about the taking the product instead of the minimum. I think the answer is basically we don't have a specific answer on that right now, so we'll leave that one for chat discussion later. All right,
Both options are feasible. Whether you want to do the minimum or the product, both are feasible. So just need to think through that a little bit more. But definitely a good shout.
Sweet. I've reached the end of the questions again, so we'd love to have more folks up on stage. Please raise your hand if you've got any questions. I think we've got some new folks in the audience too, so I know somebody's got a question out there.
People are just jonesing to read this proposal. So I think maybe we just call it, several people are typing now. So maybe
Let's give it a sec to see what this typing's all about.
Nobody wants to hop on the chat, evidently, though.
That's right. Cool. Last call for questions in chat. Harry Smith asks, is Mudge still an advisor? Yes. Jams asks, are NFTs still being made for the new proposal?
Don't know. These will be done as 1155s, and the thought is to hopefully still do some like 721 for people that participate in the barn raise maybe before it launches or something, but that would be optional to mint and separate. And frankly not a priority at the moment, so I don't know.
Yeah, I can speak to that a little bit, and it'll also be in this proposal doc we share. But on the artwork front, so since we're like Publius said, since we're using 1155s, they don't quite work how we had originally intended for unique artwork. So what we'll do instead is mint optional separate ERC 721s, so standard NFTs with that distinct artwork. And there'll be some new parameters around that. I believe right now what we're discussing in the snapshot is minimum participation for getting an NFT being 1,000 USDC, and then they're limited to the first 10,000 transactions with Fertilizer. So yeah, we'll have all of this in the proposal. Gilfoyle asks, is there potential to use this barn raise system in the future to raise money for other things, internally or externally to Beanstalk?
Hell yeah. This is the cool thing about this. Like, there's so many different proofs of concept that are going to be made. The concept of having ability to skip the pod line for certain instances, the protocol. It's all going to be really cool data to see in practice. And none of us know if this is going to work, right? Like, continues to be an economic experiment as much as a governance experiment and other things.
Next question from Warthog. So during the barn raise, can just buy in any dollar increment and have multiple transactions?
Sure.
I'm not sure we have an answer to this one, Disco Stew, but Disco Stew asks, how much is a white label barn raise worth to Terra?
I don't think they can afford it, unfortunately.
Cool. Well, I think that looks like all we've got in terms of questions. I know everybody's rearing to go read this proposal. So what we'll do is we'll wrap it up here. We'll drop the proposal in Discord. The idea is we'll open up a new channel specifically for discussing this proposal. I believe it's going to be called BFP-72. So keep your eye out for that. We'll tag everybody, and please keep the sort of conversation centered in that channel so we can make sure we get to everything. But would love any and all feedback on this proposal. We'll send it over as a Google Doc link and a PDF. And yeah, just really excited to move forward. Expect, at this time, we're kind of looking towards pushing towards a snapshot sometime this week. So let's get some conversation going. And thanks everyone for your questions and for taking the time to join us. Publius, any last thoughts that you'd like to throw in here?
I mean, I just would emphasize that this is riskier. This is economically higher risk and long-term higher reward, but it feels like a significant improvement over the previous proposal, in our opinion. So we it's just important that everyone recognizes this is a riskier approach, but it's potentially also an opportunity to prove the model that should under no circumstances be passed up, assuming we all have faith in the model. And at the end of the day, I think that's what we're all doing here.
Great. Well, with that, we will wrap up here. Thanks everyone again for joining. We'll send that document soon, and we'll see you in